Thanks a lot. So Rise Gold is traded on the CSE, ticker RISE, and on the OTC, ticker RYES. And I'm the CEO of the company, Ben Mossman. I'm a mine engineer. I've worked at 8 underground producing mines. So our mine, the Idaho, Maryland mine, is a past producing mine. It's in Grass Valley, California. And you hear a lot about the mother lode in California, but Grass Valley was the highest producing and highest grade gold district in California. It produced 13 million ounces of gold. When these mines were forced to shut down, the 3 largest mines by production in California in 1942 were all right beside each other. Number 1 was the Idaho, Maryland gold mine. Number 2, the Empire Star, which is owned by Newmont. And number 3, the Banner mine, which is just beside the Idaho, Maryland. So we own all the original land holdings of the Idaho, Maryland mine. It's all private land, so it's 2,800 acres of private mineral rights, which is all the original holdings of the mine. We own 100% of that. In addition to that, we own 175 acres of industrial land on surface, including the main vertical shaft for the mine, which is the New Brunswick shaft, goes down to 1,000 meters depth, and was built to accommodate a 2,000 ton per day operation. When it was shut down, they did 1,000 tons per day. And then after we bought the mine property, we bought an additional property, which you can see in that photo, going to the background of the photo. That site is an ex-sawmill site. It was a major sawmill there until 1992. So it's a major industrial property. You can see it's quite level, most of it paved. It comes with a 4-acre clay line settling pond, which will be useful in the future for the reactivation of the mine. So a key part of this project is on private land. The United States is the only jurisdiction that I'm aware of where you can actually privately own minerals. So it's a very rare situation. In most places, the minerals are owned by the government or the crown, and you're leasing them. So this creates a lot of risk in mining, which has only become worse as time progresses. So we actually started looking for private mineral rights in the United States before we had come across this mine. So we were looking for places where there were secure mineral interests and permitting could be done in an orderly and a predictable fashion. So that's one of the key parts of this project. It's all private land, and in California, the counties are the entities that run land rights for private land. So you're not dealing with California State, so you're dealing with the counties. In this case, it's Nevada County, California, and because it's such a historic mining history, mining is actually written right into the local zoning codes. So, for example, for exploration drilling, there's no permits required at all. It's an allowed use. And for mining is written specifically into the zoning code as an allowed use, subject to a use permit. So we can drill on our land with no permits required at all, and we have done that for over a year now. And when it comes to dewatering or putting the mine back into production, you need a use permit from the county, but the county is the lead agency. So you're not dealing with the state of California. The only discretionary permits is with Nevada County. And Nevada County has a recent track history of permitting mining projects, including an open pit gold mine 8 miles east of us was permitted just a couple years ago. Newmont permitted a water discharge from their mine, the Empire Star, which is very similar water as what would come at this mine. So it's quite clean. You have to remove the iron and the manganese in the water, discharge it to a local creek called Wolf Creek. They got that permit in less than 9 months. So you can see there's not many places in the world where you can permit a major water discharge from a mine in less than 9 months. So the third one there is a gravel mining operation. They actually expanded that operation, doubled production. They got that permit done less than a year, and that mining operation actually extracts sand and gravel right from the bed of a river. So this slide shows the historic production of the mine. So you can see there the total production of 2.4 million ounces at an average head grade of 17 grams per ton, or a half ounce per ton. And that head grade is the actual grade of the material that was fed into the mill. That's after mining dilution. It's after mining materials that are sub-economic as part of their exploration. That is the actual grade of the mill. So when you see numbers that are in a resource or you see them in a drill hole assay, that's an in situ number, and that is not usually the number or anywhere close to the number that actually ends up into the processing plant when you start mining it. So it's a very high grade past production. There's two parts of that. There's two mines that are very closely related. The Idaho mine, which produced 1.6 million ounces at an average head grade of 28 grams per ton, or almost an ounce per ton. And then the Brunswick mine, which just started into production in 1936, it produced 790,000 ounces at 9 grams per ton. So this mine, it was running basically at full production in just before the war. So Jay actually had some good slides in his presentation about the history of U.S. Gold and money. So in 1934, the U.S. government raised the price of gold from $20 an ounce to $35 an ounce, which was quite valuable for U.S. gold companies. So this mine very quickly expanded its production, and by 1941, it was producing 129,000 ounces of gold every year at close to that half ounce per ton head grade. And it was the second biggest low gold mine in the entire United States. So, and keep in mind that this is before World War II and the major technology that came out of the war. So that was an incredible amount of gold production for that era. And it was second in production only to the Homestake mine, which is one of the greatest mines in the history of the United States. So the important thing about this, and this is why we became very interested in buying this mine, is that it was forced to shut down. It was not mined to depletion. So what happened is the United States, during World War II, they decided that gold mining was not going to help them win the war. They started out by forcing gold mining companies to not be able to buy steel or raw materials or new equipment. And then soon, by 1942, they decided that because they wanted more base metal mining to support the war effort, gold's not going to help them build war machines or win the war. They decided if they ordered the United States gold mines to shut down, that those resources would go into base metal mining and support the war. So this mine was incredibly profitable at the time. They had just completed a major capital expansion to double production. So they're already the second biggest low gold mine in the entire United States. They were going to double the production. They put all that capital into achieve that, to go from 1,000 tons a day to 2,000 tons a day. And right when that was completed, were ordered to shut down. Devastated the company. They did reopen after the war at about half the production rate, about 50,000 ounces of gold per year. But because the gold price was fixed at $35 and inflation was very high after World War II, basically the price of gold in real dollars continually decreased until they could no longer make money. And this mine and many other American gold mines shut down and never reopened until the gold came off as fixed. In this case, it was basically preserved by a company that had a lease on it for 25 years. And since it was shut down, the second biggest low gold mine in the entire United States, not a single hole had ever been drilled underneath the workings until we started drilling last year. So there's not a lot of time left, but you can look on our website. It has a lot of information on geology. We've been drilling for a full year. Our idea was that a mine of this scale should continue to depth. It does. We've been drilling for a full year. The last result we put out in December was 149 grams per ton over 6.8 meters. We're drilling full time. We have our own drill, our own drilling crew. We have, since we started drilling, two major investors come in, Southern Arc Minerals, who invested, I think it's $2.75 million. Once we started doing a bit more drilling, by hole 5, Yamana Gold, who's one of the larger gold companies with almost 1 million ounces production of gold per year, has invested $2.75 million in the last 4 months, and their major shareholder was about 17%. So So drilling's in progress. It's been very successful. You can come over to our booth. We're just in the corner here. Just some of the pieces that we have there. A lot of visible gold and good drill results, which is going to continue over the next months.